Let's talk bridging finance. We get a lot of questions about bridging finance. And what does bridging finance mean? It means that you can buy your next property before you've sold your current property, and it bridges the gap between houses, right? So let's talk about a particular scenario when a client is going to have debt at the end of it, because zero end debt bridging finance is different. So this is assuming you've got your current property with a loan against it and you found a new property you want to buy. What we can do is we can get the finance for the new house plus the fees and charges. So purchase price, stamp duty, transfer fees, and all the fees to buy this property, plus your existing loan. The bank will take that on for up to 6 months, right? So, well, some banks 12 months. So what they do, we need to do calculations for you to make sure that you can make that happen from an income perspective and an equity perspective. So what happens is the lending is for whole purchase, stamp duty, transfer fees, existing debt. So you can imagine that during that period, the debt is quite high. It's called peak debt. What we have to allow for is 6 months worth of interest. What if the property sells for less? So the banks are looking at a worst case scenario. What if you can't sell house number 2? But what bridging finance does is enable you to buy this one before you've sold this one. And then however many days it takes until you've sold this one is how many days worth of interest you'll pay on that bridging finance. And then once your property is sold, your real estate agent gets paid, the old loan gets paid, the cash comes in, and you get your new loan on property number 2. Now, we help clients with bridging finance every single week. It doesn't suit everybody though, because of the buffers that have to go in there from a compliance and regulation perspective. And there's peak debt and there's end debt. It doesn't suit everyone, particularly when clients want to spend the most that they can, because it uses 6 months worth of interest and equity. It's got a buffer in case it sells for lower than what the bank's valuation is. So it's the bank's valuation on both properties rather than what the agent thinks yours going to sell for. So every now and then there can be a little bit of a variance in that figure. And so there's a lot of calculations involved in bridging finance. But if a client wants to if we do the figures based on selling and buying, and it means you can spend this much. Generally with bridging, it brings down your new purchase price. So it doesn't suit everyone, but we are experts in it. So if you've got questions about bridging finance, reach out to us. We'll get a valuation done on your existing property. We'll walk you through the whole process. We'll let you know if any cash needs to go in to help either one of those scenarios in regards to maximum peak debt or end debt. And we'll explain the whole process and work with you, your agent, and of course we've got a conveyancing team that we can recommend as well. Have a great day.